and government.
Hello and welcome to BloombergQuint. It's been a rather subdued quarter coming in for Brigade Enterprises, where EBITDA has come down by 11.5% year-on-year basis. But then to understand more about the financials in detail, we have the ED of the company, Ms. Pavitra Shankar. Hello and welcome to BloombergQuint. Hi, this is Nikki. I'm going to start off by asking you about the making of the numbers, especially the kind of dip we've seen in operational performance. Also, we have seen the top line growth coming off by as much as 20% in this quarter. Apart from delayed revenue recognition, is there any other factor which goes behind the making of these numbers?
Hi, morning, Nikki. Thanks for having me. Actually, I'd just like to say that operationally, we have been doing very well. On the financial results, yes, in terms of the overall revenues and the EBITDA and so on, there is a decline based on the same period year to date and FY19. But operationally, I'm really happy to say that we've been having a stellar performance on the ground. Our sales numbers, we have done 3.2 million square feet for the last 9 months, which is the highest ever for Brigade. Leasing-wise, we've done about 2.24 million square feet in the last 9 months as well. And in fact, our collections for the last quarter, specifically Q3, has been the highest ever at 732 crores. So while on the financial side, there is some distortion due to the Ind AS 115, on the ground, we see the extremely positive results.
Sure. With that, I'd like to ask about the sales volume growth. Will that meet the guidance that you've set for this financial year? And also going forward, what's the kind of guidance that you have in terms of volumes?
So for the first 9 months of this year, we've already clocked 3.2 million square feet, and FY19 actually we had done just shy of 3 million square feet. So we've already achieved what we did in 9 months, what we did in 12 months FY19. We are very confident that we'll continue on that track and to continue at this pace. Each quarter we've been more or less achieving 1 million square feet, and we are very confident to continue doing the same. Going forward, we have a really good launch pipeline and seeing good traction in many of our projects, so we are confident that this will continue.
Talking about the traction in your segment, especially that comes in from affordable housing segment, the average selling price for that segment stood at around 5,580 per square feet. So do you see the prices lowering more the next couple of quarters, given the kind of sequential dip we've seen?
So that rate that you see, the average realization 5580, it's a blend across our entire portfolio. Affordable housing is a big piece of that and will continue to be a big share in our residential portfolio. But it could change quarter to quarter based on what are the actual sales happening. This quarter, we do have some upcoming launches where the average price will be greater than 6,000, and we are still confident that it is hitting the sweet spot of the market. So it really depends on the on what traction we see in the sales of which projects.
All right. Right now, the trend has been higher for affordable housing segment that you mentioned. How about the hospitality business? Is there any kind of stake sale talks which have been ongoing in this business? If yes, then what's the kind of time frame we can look at?
So our hospitality business has done well so far this quarter. We've seen an increase in our occupancy levels, and in our GOP is right there on target. We have been discussing for some time now on the stake sale. We had closed on a valuation. We are still in discussions on some of the legalities. So until we have consensus on that, which we hope to do over the next quarter or so, we are still looking to close that transaction.
Sure. And talk about your capex plans for FY21 and also the debt figure. The net debt has increased by as much as 21% to around 3,418 crore. What explains that, and what can be expected going forward?
So we are continuing to invest into our leasing business. This is part of our diversified portfolio strategy. Our debt today stands at around 3,400 crores, but I'd like to draw attention to the fact that most of that is already securitized. In fact, around 1,700 of that is already securitized either in our hospitality or in our leasing portfolio. And residential business contributes only 700 crores to that entire number. So the rest of it has been used for capex. We have another 800 crores or so to continue to invest in our leasing portfolio, and we have confidence that that will be supported by good exit rentals in the next 2 to 3 financial years.
Okay, how was the budget 2020 for you overall for the real estate space as a whole? No big bang announcement except for the fact that extension of some existing exemptions continue. What's your view on the sector going forward? Will you see some amount of continued consolidation in this space?
Yes, I mean, primarily, since we are primarily a residential developer, 70% of our business comes from residential. We would have liked to see a lot more push to help consumers, to help the consumer demand on the residential side. It was good that they extended the deadline for getting your affordable housing sanction by another year. So we will continue to look at that space pretty actively. On the other hand, some of the changes that we wish that they could have looked at was the extension of the SEZ benefits for another year, at least because the sunset clause is upcoming in March. But generally, in the overall industry, specifically in residential, there has been a significant consolidation among the larger players, and we continue to see that trend, very much so in Bangalore, but definitely all over the country as well.
All right, Pavitra, we'll leave it at that. Thank you so much for taking out the time and speaking to BloombergQuint.
Thanks so much for having us. Bye-bye.